Stop. If you've just moved abroad, or if you plan to, I need you to listen closely. That Indian bank account you left open? The one with your savings? It's a time bomb. The clock just started ticking on your Indian bank accounts. Fail to act within 182 days, and your money, your investments, and your peace of mind are all at risk. Everyone knows the emotional side of moving, but nobody tells you the single most dangerous legal mistake you're probably making right now. Meet Ravi. Moved abroad, kept his old resident savings account, and thought nothing of it. Within a year, he had triggered a cascade of compliance violations violating FEMA, Foreign Exchange Management Act, and PMLA, Prevention of Money Laundering Act, that eventually led to his accounts being frozen, his investments being blocked, and potentially facing crippling tax penalties. This is the complete NRI compliance roadmap you must master. Module 1. The Foundation, NRE, NRO, and the FEMA mandate. The law is clear and mandatory. The second your feet land outside India, your financial identity changes from a resident Indian NRE to a non-resident Indian NRI. FEMA law requires you to immediately convert your old resident account to an NRO non-resident ordinary account, or open a new NRE non-resident external account. The NRO account, non-repatriable. This is mandatory. Your NRO account holds all your rupee-denominated earnings in India, rent, dividends, and interest. The money here is taxable in India. Funds from an NRO account are subject to specific limits and paperwork, like Form 15CACB for moving money abroad. The NRE account, freely repatriable. This is for your foreign earnings or salary. The key benefits are that the interest is tax-free in India, and the principal and interest are fully and freely repatriable, meaning you can easily transfer the funds back to your international account. The compliance imperative. Using an old resident account for foreign salary deposits is a direct FEMA violation, immediately flagging you for non-compliance and triggering the risk of an account freeze. Module 2. The Tax Strategy, Leveraging DTA and TRC. Ramesh also paid unnecessary tax for years because he failed to leverage the Double Taxation Avoidance Agreement, DTAA. The DTAA is the bilateral treaty between India and your new country of residence, designed to ensure you don't pay tax on the same income twice. To successfully invoke DTAA benefits, you need two things. 1. Proof of NRI status, updated KYC and bank accounts. 2. Tax Residency Certificate (TRC), a valid certificate from the country where you currently live. Without the TRC, India will apply the default, higher domestic tax rate on your Indian earnings. Specific tax scenarios. Your rental income in India is taxable, but you can claim standard deductions. Capital gains from Indian assets are taxed based on short-term versus long-term status, and having the right KYC is critical for correct tax calculation. This strategic use of DTAA and TRC is your primary tool for minimizing your global tax burden. Module 3. Investment and KYC Transformation. Your bank account is only one piece of the puzzle. Every single investment you own, your demat account, your mutual fund folios, your fixed deposits, and your property ownership must have a status updated to NRI KYC. Ramesh tried to sell shares in a panic, and the trade was instantly blocked because his demat still showed him as a resident Indian. Mutual funds and SIPs. If you are a US resident, many Indian mutual fund houses will not accept SIPs due to complex US regulatory compliance (FATCA). You may be forced to redeem them. Always check your folio status immediately. PPF and other schemes. Crucially, your Public Provident Fund (PPF) account cannot be continued after you become an NRI. You must close it or allow it to remain dormant until maturity. Similarly, check the status of any National Savings Certificates (NSC). Property. Even your home loan status and property titles must reflect your NRI status to avoid severe issues when selling the property or attempting to repatriate the sale proceeds. Module 4. The Legal Safety Net, Power of Attorney, POA. This is the section most NRs ignore until it's too late. Romesh needed a document signed to sell an ancestral property and had to book an emergency flight back just for a signature. Avoid this nightmare with a power of attorney, POA. A POA is a legal document giving a trusted resident, like a parent or sibling, the authority to act on your behalf for specific tasks, property management, bank account operations, or signing tax documents. You can opt for a special POA for a single task, like selling one property, or a general POA for broader financial management. The POA must be drafted, signed by you, and then apostilled or attested by the Indian Embassy or consulate in your country of residence before being registered with the sub-registrar's office in India. This piece of paper is your essential financial insurance policy. Module 5. Digital Security and Access Control. This is the vulnerability that gets everyone. Romesh kept his Indian SIM card active because it controls his bank OTPs, his UPI ID, his Aadhaar link, and potentially his entire digital banking ecosystem. The SIM card trap. If you lose that SIM, or if the international roaming suddenly fails, you are instantly locked out. You can't reset passwords, you can't authorize transactions. The second you lose that physical SIM, hundreds of thousands of rupees are suddenly inaccessible. The digital fix. Your goal is to decouple your essential financial access from a single unreliable physical SIM card. 1. Change contact details. Shift your primary banking contact number to a verified international number, or a highly secure email if your bank allows. 2. ESIM. Consider moving to an ESIM provider with dedicated roaming services, though even this is temporary. 3. VPN. Set up a dedicated virtual private network VPN for accessing sensitive accounts to manage geo-restriction flags and ensure your digital footprint is transparent and verifiable. Action Plan. This is a complex journey, but understanding FEMA, DTAA, and local regulations is non-negotiable for financial freedom. Don't wait until the freeze notification hits your phone. Take action today by 1. Converting your accounts to NRE, NRO. 2. Re-registering your assets with NRI KYC. 3. Securing your life with a POA. And 4. Fortifying your digital access away from a vulnerable Indian SIM.